The latest monthly report by the Finance Ministry points to a slowdown in economic growth here in Korea, largely due to weak exports and domestic consumption. This marks the 7th consecutive month that such a comment has appeared in the report. Shin Se-byuck reports.
Concerns over an economic slowdown in South Korea coming from the Finance Ministry for the 7th month in a row, mainly due to sluggish recovery in private spending and weak exports amid high inflation. In November, South Korea suffered a trade deficit for the 8th straight month, the longest streak since the 1997 Asian financial crisis. Exports, the key growth driver, also fell for a second straight month, down 14% on year to just shy of $52 billion because of weakening demand for export items such as chips and steel. Private spending has also shown signs of losing ground too. In October, the country's industrial output fell 1.5% a month, or by the most in 30 months. Retail sales, a gauge of private spending, also slid a month by 0.2%. All this comes as consumer prices continue to rise at a historic pace. The Consumer Price Index rose 5% on year in November. And while that is the smallest jump in 7 months, it marks the 7th consecutive month that the index has risen by 5% or more. A noticeable change in the December edition of the report is that the Finance Ministry for the first time said the recovery in private spending is slowing down. Up until last month, it had said domestic consumption was on a moderate recovery track thanks to improvement in the job market and in in-person services. One expert explains that this is part of a broad correction across the South Korean economy.
To rein in runaway inflation, major economies have raised interest rates. This does two things. For people, their real income drops, meaning they spend less. For companies, they deleverage, meaning they invest less. Such things began appearing in earnest in the second half of this year.
Meanwhile, as for external economic factors, the report said the Fed's rate hikes and China's easing of its zero-COVID policy have lowered market volatility. But uncertainties still linger, such as global inflation and the war in Ukraine. The same expert said South Korea, which is heavily dependent on exports, will face downside risks as long as these geopolitical uncertainties continue. Shin Se-byuck, Arirang News.